Eye-popping gains today. Look at that, guys. Shares of Moderna, yeah, up 140% at $151. Merck is also higher by 12.5% at $152. They announced positive results from the first ever late-stage trial of a skin cancer treatment. Merck shares are also hitting. That's an all-time high on this, too. Let's bring in my next guest. He previously recommended both of those stocks on this show. You're my hero. You're still, I believe, holding shares of both. Paul Schatz, the president of Heritage Capital. Wow, give yourself a pat on the back. You're still holding? Did you sell? What's your reaction?
So thanks for having me. And it makes up for a lot of other mistakes I've made this year and the last couple of years. For full disclosure. Yeah, so we hold the majority of our position, but I did sell to prune back the size of the position, both some Merck and some Moderna on the first hour of trading.
Okay, well, I'm just pulling this up here.
That's because the position size got too big. The stocks jumped. The position size got too big for the portfolio that it was in. Yeah. So as normal good portfolio management would dictate, we paired and sold some off.
What are you having for dinner tonight? Nice steak dinner, maybe some lobster.
I'm having leftover fish tacos.
Moderna, they're low. Their low, Paul, was $22 on November 21st of 2025. 22 to 153 now, and they hit 163 earlier today. Okay. You can't ignore that story, but let's move on. You say consumer staples are starting to look attractive here, and your top pick is Kimberly-Clark. I guess you always need paper towels and toilet paper.
And don't forget diapers. So look, I like to find out of favor sectors. We will ride semiconductors. We'll ride the hot, sexy stuff. But I typically am early in and I'm early out. I don't feel really comfortable when a lot of these hot and sexy stocks are all over the news. So staples, it's early. I started to buy very small staple positions. Kimberly-Clark, I believe, is our largest one right now. And again, it's early and there's plenty of runway here. But look, they pay a big fat dividend. That was one of the things that interests me. My threshold's 4%. I think it's almost 5% now, almost 5% of free cash flow. That they're a cash generating machine. They have a merger with Kenvue coming up. Long term, it's going to be great. Short term, it's going to be a little bit noisy. Good thing for Kimberly-Clark, you know, crude oil and energy is an input in diapers. So that whole hangover from with the Iran war conflict seems to have passed by. Stock went sideways. Another criteria of mine, 6 to 9 months went sideways. It is now percolating. I think it's again really early. I think people have plenty of time, but with almost 5% dividend, you're paid to wait. And as the economy softens, which I think it will, the staples may get some love in Q4, Q1.
I'm reading this as this is a name you want to marry, not date. This is stability. This is a dividend player, or no?
I like how you phrase that, because I usually say there are very few stocks I'm going to buy to die with, and you say married,
so you're not marrying
right now.
Till death, we do not
part. But right
part.
now, the staples, I'm just dating them. I'm going to date a bunch of them for a while and figure out how it goes. I'm sure I will hone down my list over time. You know, Smuckers and Hormel, and there's a whole bunch of them out there that warrant attention. But I think for at least me, Kimberly-Clark has, for me, really definable risk reward. If I'm wrong, which I've been before and I'll be again, we'll stop out and move on. But I'm okay holding this for a while and seeing how it works out.
Okay, Paul, the 2-timer, maybe 3-timer, got it. Talk to me about Cameco, uranium. Why do you like them?
So I think uranium, this is not a story for 2025 or 6 or 7. This is a really long-term story. You can say it's because of the AI centers or what's going on around the world. That's all well and good. Here's the bottom line. It's a good play on uranium, number one. There's an increasing backlog. Nobody is shocked that we need power around the world. The key here is they own 50% of Westinghouse. Westinghouse builds nuclear reactors, and they are the Rolls-Royce in that area. Most important, Westinghouse is, there's rumors, there's quiet talk about Westinghouse going public yet again in 2027. All this adds up to CCJ is a really good story long-term, and it doesn't act and look like so many of the other stocks out there. I like that I like to find unique plays that will zig when everything else zags.
I like that one. And quickly here, I have 20 seconds. A water treatment player called Ecolab. I'm sorry. You think that is also an AI data center play potentially?
No, so that's more in the kind of the corporate sanitation business. It went vertical like Moderna did during COVID because everyone was scrambling to find a sanitation product, et cetera. Right. ECL is a great long-term story. It's a huge earner. It is a growth story. It has always traded expensively. It has unwound the surge in power of that move into COVID, and I feel like it's now become almost ignored. So again, we're in a new phase for Ecolab, and I think it's poised for new highs. I think all these stocks are good for new highs in 2027.
Picks that hold water. Nice banner on the screen. Paul, thank you. Nice to see you.